I'm Sarah, a tutor at Accountancy Learning, and in this video I'll take you through the Level 3 Business Awareness Sample Paper 2 Task 1. So this task is all about organisations and ethics for accountants. We're told in the question that for this task an extract of the AAT Code of Professional Ethics is available in the references section to the right hand side. So on your screen you'll have a little references section. If you click on that you'll be able to open the Code of Professional Ethics if you need to. Let's look at part A then. We need to identify whether the following statements about ethics for accountants are true or false. The accountant has a responsibility to exercise professional scepticism to help identify any errors or fraudulent transactions. So this one is true then. Accountants do have this responsibility. They need to be sceptical of the accounts that they are working on, and this will help them identify whether there's any errors or indeed if fraud is taking place. The AAT Code of Professional Ethics provides a framework to apply to ethical situations to determine appropriate action to take. Again, this is a true statement. So the AAT Code of Professional Ethics is there to provide guidance on what we can apply to ethical situations to help us understand what we should be doing. These aren't a set of rules as such, it's a framework that we work towards and with. Jenna is an AAT member working in the finance function of a business. The production manager has been putting pressure on Jenna to change the figures in the most recent monthly reports to be more in line with the original budget. Jenna has discussed this with the finance manager, who has said, just change them to what they suggest. The production manager often asks for changes so they all still get their monthly bonus. She will just make our job really difficult if we don't change it. Now we're asked to complete the following statement. If Jenna proceeds to change the figures in the monthly report, she will be breaching the fundamental principle of. So if we look at the question, we know that Jenna is under pressure and she has been asked to change the figures, and this is to help the production manager and the team to get the monthly bonus. So because we are looking at changing figures, this is then being dishonest about what has happened in that particular month, so therefore it would be our integrity that will be breached. The next part then is she should, and then we've got leave the correct figures in the report and raise the matter with the finance director, or change the figures but remind the finance manager that it is a breach to the fundamental ethical principles. So in a situation like this, we should still do the right thing. So we need to leave the correct figures in the report, and then we need to then report it further up. So the finance manager is agreeing and just saying, well, change them, because the production manager is just going to make our job really difficult if we don't change it. So the finance manager is effectively in collusion here. So you then need to go beyond the finance manager and raise the matter with the finance director. Identify which one of the following organisation values is not key for ensuring ethical behaviour and compliance with regulations. So we're looking for one that is not key for ensuring ethical behaviour and compliance with regulations. So looking at the four options that we've got then, being transparent with customers and suppliers about the business position and objectives. So this is ethical. So this would be a way of ensuring ethical behaviour. Providing fair wages and good working conditions to all employees. So this will be compliant with regulations. So there's things like the national minimum wage, and there are also things in place to protect workers' rights with regards to working conditions. Ensuring suppliers are paid at a fair price and within an agreed credit period. So this is also an ethical way to behave, to make sure that we are paying our suppliers and we're paying them a fair price and within the agreed period. So the last one then is going to be our answer. Having a reporting practice which will always put the best business performance forward to shareholders. So this means that there might be some sort of changes within what's being presented to them. So whatever's presented should be accurate and not adjusted in any way to make it look better. So this would not ensure ethical behaviour and compliance with regulations. Remember, our financial statements should be a true and fair view. Moving on to the next part then. Amelia has been told she may be facing disciplinary procedures because she has breached the fundamental principle of objectivity by accepting a gift from her employer's key supplier. We need to identify whether or not each organisation below may bring disciplinary procedures against Amelia. So the first one then is the National Crime Agency. So in terms of bringing disciplinary procedures against Amelia, they could not, because they actually have operational powers such as seizing goods, arresting and detaining suspects. Amelia's employer, Fadings Limited, so they could bring disciplinary action. So she has accepted this gift and therefore that is against company policy, so they will have their own disciplinary procedures. And AAT can also bring disciplinary action because she has breached the fundamental principle of objectivity. So AAT will have its own disciplinary procedure for members who do not uphold the ethical principles. C then, identify the correct business type described in each of the statements below. There are multiple owners and their salaries are not classed as an expense of the business. So if there are multiple owners and the salaries are not classed as an expense, it will be a limited liability partnership. So this is where you have two or more owners of a business. They are in a partnership, but their salaries go into their current accounts rather than being as part of the business expense. Shareholders own the organisation. So if you've got shareholders, and you can have a number of shareholders, one, and you can have as many shareholders as you need, will be a private limited company. So that's where they raise their finance, they raise their capital by selling shares of the company. Liability for the business debts is placed personally on the business owners. So this is going to be a sole trader. So this is where they take all the profits of the business, but they also have to take all of the business debts as well. And then the last one, this is a non-commercial organisation formed with the intention of providing a service. So this is a not-for-profit organisation. So this is where you're going to be thinking about things like charities. So their actual goal isn't about making profit, it's actually about being able to provide services for those that need them. Part D then. Complete the following statement about organisational governance. Higher levels of standardisation in decision making is a characteristic of, and we need to choose from centralised control, decentralised control and informal network structure. So the key here is that we're told higher levels of standardisation. So when we're thinking about standardisation, it means that it's managed largely the same way. So there's processes in place, there's procedures in place, and so therefore it will be easier to bring about process and formalities. So therefore it's normally from one place, which means it would be centralised control. Identify which one of the following statements is referring to span of control. We've got the ability of the employees working for a manager, the geographical dispersal of employees working for a manager, or the number of employees working for a manager. So there's ability, then there's geographical, so location, and then there's number of employees. So span of control then, so the control is about what, who do we control in terms of employees? So it'd be the number of people. So the span of control, small span of control will mean you have very few direct reports, but a large span of control will mean you have a higher number of direct reports. So therefore it's the number of employees working for a manager. Part E. We need to identify the contribution to the business and requirements from the business for each of the stakeholders below. So our first stakeholder is employees, and the options in the drop-down box are here. So employees, their contribution to the business. So what do employees bring to a business? So out of our options, it's going to be knowledge and skills. So this is because they join the business, they bring in all the knowledge they've got, all the skills they've got, and that means that they can contribute this knowledge and skills to the business to help the business grow and be profitable. But what do employees want from the business? So this time we're going to be looking at this box here. So these are going to be in your drop downs where you can click on the little arrow. So what is it that employees are likely to need from a business? Well, they're going to be wanting training and development. So they want a job where they can build on their knowledge and their skill set. Now looking at customers then. So customers' contribution to the business. So we've got these options at the bottom here. So what will customers bring to a business? What can they contribute to a business? Well, ultimately it's going to be their loyalty, because they are the customers that are going to be buying our products. So if they can provide loyalty to us, then we can have a secure income stream and therefore profit. But what do the customers require from the business? So this is going to be our options for this one. And when you're a customer, what do you want from a business? Well, you want a reliable service. So reliability of service. Customers want to be able to rely on the businesses to be able to provide the service that they are paying for. Moving on to the final part of this task then, we need to identify how each of the following statements demonstrates the ethical issue by selecting the correct option. So the first one, a client threatening to sue an accountancy practice if the practice qualifies the client's audit report. So we're talking about being threatened there. So any type of threat is designed to intimidate us. So it will be an intimidation threat. Questioning information provided to be able to form an opinion on its reliability. So we are questioning things. So is this right? Looking at it with a critical eye and being able to say, yes, this is right. So therefore, we can rely on these financial statements. That is going to be professional skepticism. So with finishing that task, we are now at the end of task 1.